Hi, Stephen Koukoulas, Economist in residence for Zagga, with my monthly update on key economic issues. Now, one of the critical things in the last month has been this jump in bond yields, the rise in oil prices, although as I speak, the oil prices dropped about 10% from that peak just in the last week or so. So maybe it was just a bit of a blip caused by market uncertainty, concerns about global output and those sorts of things. So I'm not too fussed by the oil price going up and back down, because fundamentally the economy is still doing well. We do have, evidence coming through now that dwelling construction activities reached a bottom. We had building approvals numbers, and while they're very volatile month on month, there's a clear bottoming in trend. And if we do get this better news for property developers and builders from a rise in house prices, yes, that's still continuing. A fall in building costs, yep, that's still occurring, and a bit of a freeing up in the demand for labour. Yes, there's the slight rise in unemployment has made it a fraction easier for people to get skilled tradespeople to work on construction side of the economy. So, and that's also aided by immigration, of course. So when we sit here, it looks like the conditions are very much in place where the RBA will keep interest rates steady for several more months to come, and that's good news. We've got the situation where the housing market is still reasonably buoyant, the rental market's still very tight, which will feed into demand for properties, of course. The prices are still moving higher according to the CoreLogic data. So the whole scenario, if you like, is one where economic conditions are sort of being blindsided a little bit by this huge market volatility that we're seeing in stocks and currencies and bonds. But underpinning all of that is an economy that is slowing. Yep, it had to. And for things like the construction sector, there's a bit of a base forming that really says to me that 2024 will be a much better year.